someone sent too much money to somewhere and we had to go and ask very nicely for them to send it back. If we had done that, I don't think I'd be sitting here today.
In Poland, when you open the account, you have to confirm that you're not going to use your bank account. Any transactions associated with crypto,
drugs, guns, whatever. Is this better than that? I don't know. Stable coins, there's a real world use case for that technology that's very clear and easy to understand. Bitcoin less so. Ooh, what a question.
My name is Alex, and I'm happy to have you here.
Alex Rud, CEO and co-founder of Fintech, holding Xpaid and consulting company Fintech Capital, former director of the venture fund Space Tech Analytics, active investor in US tech startups, building a bank that makes financial services accessible to everyone.
So we have Oliver. You are co-founder and CEO of BCB Group.
Oliver Tonkin is the co-founder and CEO of BCB Group, a leading provider of regulated payment and trading services for the digital asset economy. Oliver has more than 20 years of legal, operational, and investment experience.
Mm-hmm. And can you please share more light to our listener about your story and who you are?
Okay, well, so I'm Oliver, as you said. I'm co-founder and CEO of BCB. I'm a lawyer by background, so that's my experience. I'm 25 years, post-qualification as an English lawyer. I qualified in 2000. I worked for a firm called Norton Rose, now Norton Rose Fulbright, which is it is a big kind of global law firm.
Yeah.
I was in their kind of corporate M&A team, so I did a lot of corporate transactions, M&A transactions. That's my background. So buying and selling companies of all kinds, right? I mean, anything from kind of regulated businesses, banks. I did a lot of work in the aviation industry, ports. I mean, I had some quite well-known clients doing that, and it was mainly sort of M&A in the UK and Europe. So, I mean, I did a lot of traveling around Europe to buying and selling things. That's what I did.
Yeah, quite useful.
It was fun. It was good fun.
Yeah.
I learned a lot. I think I was thrown in the deep end quite early, so I had sort of quite an accelerated sort of experience from my sort of by my sort of mid 20s. I was doing some quite big deals, kind of on my own. So you learn a lot doing that. And then I got to 30, and I thought, well, do I want to carry on doing this in a law firm? Do I want to be a partner in a law firm when I'm 50?
Yeah.
And I didn't. So I left Norton Rose, and I went to work at what at the time was a division of GE of General Electric.
Yeah.
In their financial services and insurance team, and again doing the same thing. So buying and selling things, for GE, doing corporate transactions for GE primarily in Europe. So a lot in the Nordics, Germany, France, Spain, and the UK as well. So that was my journey. I got in, and then the financial crisis came along, the global financial crisis in 2008. A lot of what GE was doing, they didn't want to do anymore. So I sort of moved on from that. I'd done an MBA, an executive MBA, while I was at GE, which was super useful actually to give some kind of theory to the sort of practice of what I was doing. Fancied trying to be an entrepreneur, fancied trying to sort of build a business. So after did a few things for a couple of years in literally just working for people for nothing, just to try and build some experience. And then I set up a kind of small boutique kind of PVC advisory execution business, and we did a number of, again, small private equity VC deals, mainly on the kind of distress side, and like very, very far away from what I do now. So it was like aluminium.
So not fintech.
It was not fintech. So it was literally like aluminium businesses, plastics, kind of that kind of food, bakery. It was very much kind of old economy stuff. And again, I met people that I literally had never met people like that before. People who are literally on the shop floor, bashing stuff, baking stuff. It was a great experience. I mean, it was a crazy experience, but it was good fun. And again, I learned a lot. But I did that for 7 or 8 years to about 2017, and that business went into runoff. And I was looking for something else to kind of do. So my a guy that I'd been at business school with, also called Oliver, sort of approached me because he knew I had an interest in crypto and Bitcoin because we were on some kind of channel, I think, on Facebook.
So you already, that's important. So
Yeah.
That's how you
I mean,
actually got.
I'd kind of got interested in it in about 2015 because I started to see this, started to read about it. I thought it was quite interesting. So I kind of bought some Bitcoin, tried to mine it and couldn't do that because it was too hard. But I bought some and I bought some Ethereum and I was just really watching it, just playing around with it. Thought it was really interesting. And then
you were interested because of the technology or potential, I don't know,
I think it was partly investment, just as a speculation for sure. But it was technology. Yeah, the fact you could sort of transact with somebody, otherwise than through a bank, I thought was like super interesting.
Yeah.
And yeah, I was on a channel with my then co-founder, and he said, "Well, I'd like to try and do something in this space. Can you help?" And obviously, he was more of a kind of tech programming kind of guy, and I was a lawyer, kind of very much sort of quite a commercial lawyer, but I was a lawyer, and so I, on a bit of a whim, just thought, well, yeah, I'll help you do that. So we set up a company, set up a pretty sort of your limited platform, plugged into some exchanges, you built a website, built some terms and conditions, built a contract, and we started to get customers on the brokerage side, and these were people, they were kind of high net worths. There were some companies
looking for to buy Bitcoin.
Yeah, exactly. Yeah, being helped to kind of get in and out of that kind of space. And we met some people who, again, I mean, this is like 8 years ago, so it's a long time ago.
Yeah.
In this ecosystem, it was still very much,
There was no licenses, right?
No licenses. There was no regulation. That's what I quickly worked out. No regulation. So you had to kind of build something that was kind of shadow. What would it look like if it was regulated? And that was my kind of mindset. What would you have to do and show if you had a license? So the AML, the sort of best execution, best practice.
Any KYC at the time? Or?
Well, I mean, we always did KYC. We weren't obliged to, but we kind of always did. And yeah, I mean, that was really how we started. And I mean, 2017, you remember, was one of those kind of Bitcoin bull runs, and it was really the first one that people outside that community were aware of.
Yeah.
So Bitcoin went from sort of a couple hundred bucks to like $20,000 by the end of the year, and then it sort of fell off the next year. But so we rode that wave and had some good fun doing it. But I mean, this is where the kind of evolution of BCB really started, because we still needed to have some bank accounts to be able to move money around.
Right.
And we, like lots of people, had a company, and we just opened a bank account, started to sort of take money, customers, pay it to an exchange.
I can imagine how banks saw.
Well, I mean, so at the time, I mean, banks hadn't really thought about this particularly hard, but they started to become interested because we were doing quite a lot of volume, and they were asking us, well, what are you doing?
Yes.
And then we told them, and it's like, well, we don't really like that very much. so we would keep opening bank accounts, and we would keep having bank accounts shut.
In traditional banks here in
traditional banks, yeah. And I mean, we had a couple of US banks as well that played, but that was a challenge, because it's like, we couldn't keep opening bank accounts and then being closed. We were running out of banks. So I thought, well, how can we solve this problem for ourselves? And obviously my background is kind of legal regulatory one. So we came up with the idea of actually applying for a payment license in the UK. So we got a small payment license originally, and that was great, because that actually allowed us for the first time to be able to go to banks that would deal with a payment company, a regulated payment company, but they would not deal with a crypto company. So we got that license in 2018, I think, late 2018. Upgraded it later in 2019 to a full PI license in the UK. But yeah, but that enabled us really to get access to banks here and elsewhere in the world that were happy to deal with a licensed business.
And you applied yourself, right?
We did, yeah. I did it myself.
Yes.
I mean, the first one I did myself. I got a bit of help kind of later, but I was able to do that.
But you were filling in the
forms and doing the business plan, doing the forecasts. they're writing the policies.
And your partner was responsible for the platform mostly.
Yeah, I mean, he was. I mean,
Customers
he was
as well.
Yeah, I mean, he was a. He had some competence on the programming side. So built our kind of MVP, product. And yeah, I mean, customers we just found through kind of networks and whatever. But yeah,
any investments you did into the project at the beginning?
So it was pretty much bootstrapped the first 2 years. I mean, we raised, I think, a small seed round in, I think, late 2018. It was 50 grand. I mean, it was like, it wasn't much. Just to sort of, be able to spend some money on a website. And
family and friends, or family and
family
friends,
yeah, yeah, very much so. It was a couple of people that we used the UK, EIS and CIS regime to do that. So it was a small amount of money. And so with that, I mean, we were all of a sudden, de-risked from a banking point of view, which was really cool. And then we kind of started to get approached by like customers, some LPs, and then other people that we didn't know to say, look, we hear you've built this payment thing. Sounds really cool. Can we use it? And I thought, well, don't see why not. I mean, if they onboard them and we check out and make sure that they're doing the right thing, our license allows us to do it. So let's do that.
Yeah.
But obviously that did require some more money because we needed to turn the platform from something that we use for ourselves to something that was fit for purpose for other people. So we did raise we raised an additional seed round. So like pre-seed was 50. I think we raised, I think it was £750,000. £750,000 from again a couple of angels and a small investment house, investment house that was £750,000 in 2019, and that really allowed us to get the full license in the UK, and it allowed us to build a platform that was actually fit for purpose for kind of third parties to use, and that really was the start of. And then COVID came along. You remember that?
Yeah.
Which was, and then again, crypto went up again during kind of COVID. So that was really the start of, significant growth, both in terms of new customers. Your volumes went kind of parabolic, pretty much.
Yeah.
Because I mean, at the time, what we were doing, there weren't many providers, or really any. So I mean, we were pretty much certainly for some of the currencies that we were doing, we were pretty much the only show in town. So it was a nice place to be because we had more business than we knew what to do with. And, volumes, revenue, everything, grew significantly. But between kind of 2020 and kind of 23, it was a crazy ride, and we were enjoying the growth and really holding on by our kind of fingertips to make sure that we could continue to facilitate and accommodate the growth that we were seeing while remaining compliant, because that was obviously still very important.
And most of the customers at that time were from the UK, right? Or
it was a mixture.
Global,
it was a mixture, actually. I mean, we had. I mean, there were a lot of were from the UK, yeah. But we had customers from continental Europe. We had customers from elsewhere in the world. So people had, because of the rails that we had a lot of currencies. So I mean, that was super useful for people that maybe weren't not from here but needed access to what we had. So yeah, I mean it's hard to remember, but we certainly had quite quickly a really cool global customer base with some great names. I mean, the names, I mean, it was kind of partly because we had a good product, and partly because people were really desperate for the product. We had some big names using what was at the time a very small company.
Like what companies?
Bitstamp were at the time were a big one. I mean they were one of our early customers.
So some huge exchanges.
Yeah,
like
I mean, it was, they were. I mean, we were very lucky. I mean, we, had some really, and I mean that gave us obviously credibility to be able to say, look, we've got XYZ is our customers. We must be doing something right. So yeah, it was a good time.
When was this exact time when you realized that this is it, and you can devote your entire career, time,
It's a
and
good
life
question.
to
I mean,
this business?
so when I started, I mean, I had a few other things that I was doing. I mean, I was still winding down my old business. So I mean, it was, and I was doing a few other things for people as well at the time. So I mean, I thought this has got enough legs that I can commit myself to it properly. I think it was pretty much when kind of COVID happened in 2020.
So when you saw the
Yeah, I mean,
constant growth.
yeah, I mean, you've always got to be kind of, I guess, I don't know. I'm on the one hand, some people might say I'm not risk averse at all, but I am. I mean, I am mindful of risk, and I had at the time a sort of, I've got a family now, but my kids are a bit older now, but at the time they were sort of, sort of 10 and 12 or something. So I had to be a little bit careful.
Careful.
So, and my wife was like, "Oh, you sure?" Because I mean, this is the thing, right? This is the thing that we kind of forget, because people that are into the digital asset crypto market, outside the market, the understanding of it is still very limited, actually. I mean, I've got friends who are professional people. I mean, doctors, lawyers, accountants, whatever, who even now don't really understand crypto
What you are doing.
or what I do. Leaving aside my parents, who are obviously, or my in-laws who are much older, they're like, what is this? And I mean, often everything they hear is like bad.
Yeah.
Externally, none of the good stuff. So they're like, "You sure?" But I said, "Yeah, I think this has got some legs. I think it's worth devoting, a significant amount of time to, all my full attention."
Interesting, because especially at that time, like technology looked attractive,
Yeah.
but still, in terms of the commercial direction, it was a kind of risky to have those decisions done.
Yeah.
And
I mean, it was unclear, right?
yeah,
I think I look at the space now, and I look at and obviously being quite kind of close to it, and maybe what it was going on in 2020. That's 25 years ago. Very different. I mean, it has changed so much, and it has grown up, and I mean, it's hard to remember actually quite how, it wasn't regarded well, even 5 years ago by your man on the street, right?
right.
Is what I mean.
When you were starting, what did you do? Something unpopular, maybe in terms of compliance, in terms of the customers, what seemed to be very risky. I know that in general the business seemed to be even risky because as you said, at that time it was kind of you didn't understand what's the technology about. But what was unpopular, what at the end actually gave you that kind of good growth?
I mean, as I say, I'm a lawyer by background, so and I'm still a lawyer. I'm still on the roll in England, and that's a qualification that I want to keep, and it's a qualification that I wanted to keep then. So I was pretty determined at the time that we would not do anything because I was a director of the company from the start, right, and a shareholder, so my name's on the door kind of thing. I was pretty determined that we wouldn't do, or certainly knowingly do, anything which was going to jeopardize that. There was plenty of business that we could have done that we didn't do.
Okay.
Right.
So you were saying no to.
I was saying no.
Many things.
And that was not popular. It was not popular with some of my colleagues back in the early day, because I said, I just don't want to do this. I mean, my attitude to risk is nuanced, but I'm aware of it, and I was pretty clear that because we wanted to play the long game, right? Play the long game, and I mean, I'm not going to say that we were like best of breed, because I mean, we were cash constrained, and you're never going to be doing everything perfectly, but given the resources that we had, I did not want to do anything to jeopardize, a bit selfishly, me and my kind of reputation, because I am sensitive to that. And I mean that wasn't always popular. I mean, again, there's business that we kind of turned down, which others did.
Yeah.
I would add, and I think that's probably still the case now. There's stuff that we turn away or we end up offboarding that goes somewhere else, and it's like, well, and then I see it and I think, okay, okay, well, I mean, I don't know what that says about you, other business, but I mean, if you're going to take on business that we turn down, I'm okay with that. And I'm still okay with that. And that's not always popular. It's not popular with your commercial team. It's not popular with your colleagues. It's not popular with the shareholders.
Right.
Necessarily.
How did you balance in these negotiations with your commercial team? I would say you had to explain, to prepare, or
yeah. I mean, look. I mean, compliance has a reputation that's not always good in terms of business prevention, whatever, right? And I think sometimes that's fair. It's very easy to say no. Right? You create a desert and call it peace. You just, no, can't do any of that. And I've got this perfectly clean book, but like it's a book that's like tiny.
Yeah.
And that's going too far. But I think, you've got to, if you're going to attract, three things. If you're going to attract banks that will work with you, and I mean, we've got a very, very good tier 1 banking network now. I think it probably is the best. I mean, of all the businesses in our space, I think we have the strongest network, and that is partly because we operate a tight ship, and we're able to evidence that, audits, whatever, right? You can say, here you go, and tick in the box.
But still, at the end, you don't want to be at that situation where you are decreasing with your revenue because you are saying too much no. So right,
that's my point. So it's partly you've got to make sure that you play the long game. So we've got a good banking network, tier 1 licenses, and a good reputation in the market, and that does count for something. So that means that you keep. I mean, this is the thing about this market today. Risk management in digital assets is a big thing now.
Yeah,
people care about it, whether it's your liquidity, your balance sheet, and also your compliance status. So people are not going to deal with you if they're concerned about your longevity and your ability to kind of be a trusted partner. Integrations are not cheap; they're not free. People want to know that you're going to be around for the long term, and if you're not doing things right, that's a risk. So it's a balance to strike. So I think we do it well. Yes, there's some things that we cannot do and we will not do, but I mean, I think we struck the right balance. Not always the case, right? And this again, it's very easy to overcorrect in this stuff. You can go from being, not compliant, and then you overcorrect.
Open the tab.
Exactly, yeah, or open it and then close it. Right?
Yeah.
You click turn the tab off. So it's just having the right amount of water. And I think we struck the line well. I don't think everyone does do that, but I think we do that. And I mean, I guess to your question, sorry, how do you deal with it? I think you've got to explain to people that it's like a sugar rush, right? You can load up on sugar and have a rush, and then you have a crash. So if people want to have a job in the long term at BCB, or the shareholders want to have a position long term at BCB, we've got to be mindful of the fact we've got to be around for the long term, and you can only do that by making sure that you comply with your license conditions and you do the right thing from an MR point of view, and that you have good partners on the banking and the liquidity side to have a critical mass and a longevity, so you can be around for the long term. So it's a hard balance to strike. I think right now I think we struck it pretty well.
One of our speakers at the previous video, he raised this question that actually with the time, like at the beginning you have to risk because you can get more risk and you can get more money. You can find your position in the market, but I thought that later with time you risk less because you become you become bigger.
That definitely happens, yeah.
Yeah, but then when he was sharing that actually with some time you can risk more, but this risk is controlled because you have the compliance team and you don't just risk. You can accept this risk, but you understand the outcome and you can control the outcome. So what about you? Like you are telling no, or you are like taking your compliance team, for example, you are trying to analyze this risk and understand. Maybe a lot of companies were saying no, but they didn't really go deeper into the case, and you did it, and you get some right.
I mean, I would agree with that. I think it's very important. And again, I mean, look, I ran the compliance team in the early days, but I've long since left that behind. But I think being intellectually curious in a with a in terms of what a customer's doing, I think is really important, right? Whether it's sales, whether it's and then the ongoing relationship and the compliance thing, understanding what a customer does is really important. A, because you've got to do it for AML purposes, but it's also about if you understand your customer, you can probably give them a better service, and maybe do more with them. So yeah, I mean, that intellectual curiosity about what is a customer doing, if there is a risk, do we understand it?
Yeah.
Can we accept it? Can we do more with you in certain things? I think it's very important. And yeah, look, I mean, I think the bigger you get, and often your compliance team grows, and maybe even the caliber of people that you're employing in the compliance team improves. It does allow you to have a much more nuanced view of what you're doing, so that you can you can do more with people while staying on the right side of the of the threshold that you set for yourself. Yeah. So yeah, I would agree with that. Yes.
Okay. Who was your first customer, and what did they pay for?
So our first customer was I think it was a small kind of Swiss OTC desk. I won't tell you who it is, but it was at the time a small Swiss OTC desk, and they paid us for our rails. I think it was our sterling and our euro rails from memory, and they also paid us. We also did a lot of them. We worked with them on the OTC side too. So we could. That's the thing, because we could do the rails and we were plugged into a lot of big LPs. We could do both. So I think that was our first one. I mean, we very quickly, obviously, you gathered more customers over time.
How did you find that customer? Or they found you themselves?
I think it might have been a reverse inquiry. I think they saw us on LinkedIn or something, or on we had a website, and they just kind of reached out.
So you didn't really market or outreach them, yeah?
I mean, that's the weird thing. I mean, for a number of years, we pretty much, we had a website, we went to conferences and whatever, but we pretty much relied on, what you might call reverse inquiry. People literally just like sent us an email saying, "Hi, can we use you?" And that's different now. There's more outreach now for sure, but I mean, for a very long time, it was reverse inquiry. We just had a pipeline, people just recommendations, introductions, or people just literally just like kind of cold calling. I guess that was at the time. That was probably because we were lucky that we had a product which was in high demand, where there wasn't much supply.
Yeah,
and nice place to be.
And what were those like 3 strategies which you used to find the customers? Because you said one is outreach, but they checked your LinkedIn or website, or so. What were those 3 first strategies which you worked on?
I mean, we went to a lot of conferences. We sort of because this is still the case now. There's a conference every day of the week if you want, every week of the year. So we went to a lot of conferences, went to a lot of events, shook a lot of hands, kissed a lot of frogs. And again, you start to. It's the thing, when you start to build a network, people will introduce you to people.
Yeah.
And I think crypto actually is still very much like that. People want to help you. I mean, I know it's matured and it's a much more sophisticated market now, but people will try and assist others in in growing, which I think is a testament, I guess, to the sort of people that are in an ecosystem, that they want it to grow, they want it to evolve, and so that's kind of how we did it. So I mean, strategy wise, it was literally let's just someone comes, knocks on the door, we can assess them, and if we can onboard them, we can onboard them and give them what they want. I mean, I wish I could say it was more sexy than that, but but it kind of wasn't.
But it worked. Yeah.
Yeah, it did work.
So you didn't have any marketing person. It was just
Well,
you
no,
and
in the early days we didn't. I mean, we had someone who was kind of part time, who's now Sam is now our chief marketing officer. He does an amazing job. But I mean, she's the only person that we ever really had that's done that. And I mean, she did an amazing job in terms of, you know, on the branding side, on the on the kind of website side, conferences and everything else. You know, putting me in front of things like this. You know, getting us on panels. You know, it's just profile building.
And usually at those events and conferences, you had a booth, or it was like walk in, or
A bit of both. I mean, I'm not convinced about the ROI on booths, I have to say. I mean, you know, some things it's nice to have a booth and a box or a kind of room where you can meet people. But the ROI, and I mean, you go to these massive events with these huge kind of like warehouse floors, and these people with these like massive booths that cost like $500,000 for like 3 days. I think the ROI on them is pretty bad.
It's more like for branding or something.
It's branding. It's like, I mean, it's like kind of Gucci who have a shop on like Regent Street. No one goes in. It's a massive loss leader probably, but it shows that you're kind of there.
Yeah. Yeah, usually that like people come there and they see like the company
Yeah,
from year to year.
They must be doing
that
well.
still exists. Yeah.
Exactly. Yeah. So, I mean, the actual ROI on, are you winning business from that booth? Not sure. But I mean, it's a nice thing to have. But I mean, yeah. I mean, so we did, and we still go to a lot of events. Partly because a lot of our customers and stakeholders are kind of there, so you can meet people just to say hi and, you know, meet people face to face. It's amazing how much stuff you get done that maybe is stalled or it's like, you know, sluggish. You meet someone face to face, suddenly it accelerates. So
Right.
in that sense, conferences are useful, but booths, not sure.
And it still works. Like when you have some conversations online,
sure.
you come to the customer. I think it's the question also of the trust, first of all, and second thing, who stands behind the company, like,
Yeah.
right? Because behind the company always there is a person, and you want to know who's that person.
I mean, absolutely, and I think that's the weird thing about crypto in a way that, I mean, so many businesses have kind of built up that are entirely remote, and it's like, well, what am I dealing with here? I mean, is there an office? Who are the people? And I think that's, you know, that is unsettling to some people. I mean, particularly people who are not crypto native people, who are like maybe it's banks or, you know, institutions that are not from that. They like to see some substance. They like to go to an office and see people, and look at someone in the eye that there's a legit person, man or woman, you know, sitting behind a desk. People like that.
Did you have any problem with trust at the beginning, that someone like found you, but at the end they refused to work because it's still not enough arguments for them?
I don't remember that. I mean that's the thing, and that's one of the great changes I think in digital assets since I've been involved in it, is that evolution from, I guess, that element of kind of risk management, risk assessment was very immature in the early days. It was very immature. People did, I mean, well, I guess some of the scandals that we've seen, right, have been because risk management was non-existent, both internally and externally. And it was very, very immature. So I don't think we ever had an example of somebody that said, oh, no, I won't, certainly not in the early days, I've not dealt with you, I won't deal with you because of X. If you had a product that they kind of wanted, they would just buy it. They would just take it on. I think now it is different. I think people are a lot more choosy and a lot more cautious about, you know, particularly where there's, as I say, I mean, if someone's trusting you with their money or their assets, and there's an integration cost there, people will do a deep dive on you and your platform, your finances, everything, you know, you name it, because they're worried about losing their money.
Yeah.
But also there's an opportunity cost. If someone spent 6 months integrating, they don't want to find that partner's disappeared, and they've got to go find somebody else to integrate with. So, you know, there's definitely a, I think that is probably the big change, I think, in this industry since I started, is that
Yeah.
people are very interested on the risk management side, whereas they really weren't before.
I think now it's even more important to be like to look after your reputation, the
Correct.
licenses set up,
Yeah.
because before even me, I started the business 4 years ago, and at that time when you were choosing some, as you said, banks, liquidity providers to work with, you basically have to take the company, give it to your compliance team. They try to research more, look on the internet, and they will give you some description of the risk profile. They see how reliable this partner is. Now you just take the company's website, put it in ChatGPT, ask them to do deep research.
They'll give you everything.
And they give you everything. And I was surprised, I have a compliance background as well, so I was surprised how deep it can go into everything, like who were some scandals, the articles about this business. And usually it gives you it gives you the entire landscape.
Yeah. I mean, particularly where, I mean, obviously we operate in jurisdictions where, information is pretty freely available, whether it's accounting, whether it's regulatory, it's all out there. But again, people care. People care now. They do, because they have reputations themselves. They have regular licenses. They have shareholders, and they don't want to engage with people that are not reliable or not trustworthy. Because you look what happened with FTX. That was the moment in which there was that massive shift, right?
Yeah.
It was the year, that 12 months before, when you had all the kind of CFI lending sort of went kind of bang, Celsius, Three Arrows, Terra Luna, and then FTX was the kind of culmination of that. And I think that was really the moment in which the industry grew up. And it's like, we're not going to just take someone's word for it that they're good. We want to verify, trust but verify, as they say.
What happened to your business at that time when FTX collapsed? And
we were, I guess, we were in an unusual situation that we were on the good side of that collapse. But
you were able to take advantage of this,
a little bit, a little bit. But I guess because we were able to demonstrate that we were, we were good. But I think it definitely was. It definitely demonstrated that to the market they needed to be much more careful as to who who they dealt with, and I think with all these things, right, there's always a shakeout, and maybe that's, you can say never, but I mean I think that certainly was at the moment the market grew up, because they suddenly realised that some guy in a t-shirt and sort of baggy trousers who looked like they just kind of got out of bed.
Not enough,
Was not enough.
And how specifically did you take the advantage? Like some customers, you were able to onboard some customers?
We were able to onboard some customers. I mean, we were obviously able to demonstrate that we were, in a
compliant
and being in a kind of good place. So we won some business from that, and I think we also, this is the thing, right? In all of these crises, in all these sort of peaks and troughs in this market, at every trough there's a shakeout. Some people just kind of disappear.
Yeah.
So just by being able to demonstrate that you're still here through like multiple peaks and troughs, that does itself, I think, give kind of confidence, because if you can survive, you can continue to build. I mean that was kind of the time. It was very close to the time that we won our French license. So we were able to come up with some good news on that as well. And I think it just being able to stick around, not take a loss. We didn't lose any money from that crisis at all. Was a good thing. But I think this is my point around, from the start we were, I think, kind of quite cautious, and we tried to apply best practices from my time in my previous jobs to the industry. So you look at something like kind of CFI lending was a thing. I remember that was a hot thing in Act 21, 22. Everyone was like, Genesis and people like that were sort of lending, and it was crazy yields.
Yeah.
And we were under quite a lot of pressure to do something similar, and we built a structure. And we went out and tried to find some partners, and I kind of put my risk hat on, which I don't wear that often, but that's my kind of risk hat. And I went out and talked to a lot of people. Say, well, explain, how do you do this? And how do you achieve these yields? And no one was able to explain it properly. And it was like, so I said, well, I was like, I don't think we should do this, because I mean, if this goes wrong and we can't get comfortable that we've done what we should do, it'll finish us. And that was very unpopular. The fact we said basically, we just can't do this. Very unpopular. I'm really glad we did, because if we had done it, and then, because I mean, we'd have probably been on the hook to FTX or Celsius or kind of, whoever. If we had done that, I don't think I'd be sitting here today. Because I mean, you think you can get the shakeout from that space, unless you've had literally unlimited funds on in terms of the balance sheet, you were dead. So, like I say, I'm glad we didn't do it, and that was very unpopular at the time, but it was the right thing to do.
It's like they call it a tree strategy. So like you have a tree, and it becomes more popular in the neighborhood if it stays there, because each year like you have like a very small growth.
Yeah.
But someone go close to this tree and they see that it's still there. It gives you a bigger shadow.
And the trunk gets thicker.
Yeah, it gets bigger, and then with time, like people see you are there and they start hanging out around. So it's kind of like they call it a tree strategy. So better be there, and always stay, and someone will
stay alive.
Yeah, will find a shadow there under under your leaves. So if we talk about the compliance, what type of customers you refuse to take?
I mean, we have a risk appetite statement that we adhere to. So I mean, our compliance is deep. I mean, we do go into quite a lot of detail in, because I mean, crypto is still a high risk industry. Let's not kid ourselves. I mean, it's there is still scope for nefarious behavior within the industry. It's a thing.
In Poland, when you open the account, they say like you have to confirm that you're not going to use your bank account with any transactions associated with crypto, terrorism, and all these things. So it stays together.
Unfortunately, it does. I mean, right or wrongly, that's a thing. So I mean, we do the due diligence is deep. So I mean, if customers do not commit to doing the right thing from an AML point of view themselves, we won't onboard them. Or if we do onboard them, we find out they're not doing what they say they do, adios. That is a thing. So I mean, that is a non-negotiable thing. I think some uses of crypto around, I guess what you might call kind of high risk activity, you need to be really careful about. Whether it's gambling, other stuff like that, you have to be careful. Some uses of crypto are clearly illegal, whether it's drugs, guns, whatever. No, thank you very much. But I think how our customers use our platform, we do monitor it very carefully. And if we don't like what we see, we do have a zero tolerance to that kind of behavior. So it's annoying if you have to get rid of a customer that's revenue generating, but like I say, it's playing the long game. Keeping your license, keeping your key relationships in place. So unfortunately it's a non-negotiable.
So it happens in your business that you have a customer, you have some relationships with them, but then you see that transactions get more suspicious and you have to say no. And
absolutely, yeah. And I mean, we don't shy away from that. And again, it's sometimes annoying if it's a customer that's profitable,
right?
But you have to say, I'm really sorry, we can't service you anymore. It's painful, but necessary.
Yeah.
I don't know what else to say really, other than that.
You build a platform, and I have a few questions regarding the platform. So, what was like a kind of the MVP which you had, which already went live, and you presented to your customers? And then the second question is regarding your business. What is most complicated part of your business today? Is it technology? Is it compliance? Is it regulations? Is it, I know, some market challenges?
All of the above. So as a platform, I mean, our like an MVP, it was, I mean, on the trading side, I mean, at the start there was no platform. It was literally we did stuff by email or WhatsApp, right? I want to buy some Bitcoin. Here's the price. Send me the money, and then we would send it to their wallet. So there was
literally on emails.
It was literally email and WhatsApp. So that was that wasn't even a platform.
Yeah.
And then we built it was really when we launched the payment business that we had to that obviously wasn't going to work. So we built a pretty primitive kind of user interface console, which people could access an account. There you go. There's your balance, structure payment.
Yeah.
To that, and it goes, and then you see money come in, and then you can generate a CSV statement. It was a pretty basic thing, but it was something we had to build. Otherwise, people couldn't use it.
But it was automated already, so you don't have to send anything.
Yeah. I mean, it was straight through. I mean, some banks that we had at the start were not automated, so we literally had to we had a team of people that were literally processing payments manually.
Yeah.
Which again is not really scalable. But I remember, I mean, I won't name names, but there were we had 3 or 4 terrific graduates who are now at other firms, sadly. But I mean, they were terrific young graduates, and they would literally work 24 hours a day processing payments for us, and they were terrific. Honestly, they were so good. I've got fond memories of all of them. But again, that wasn't scalable. But again, it was really about preserving the illusion of a sort of a platform that people could see. But behind the scenes, there were people just beavering away doing.
Right. It's like this AI, first AI companies where like you had some people in countries where the labor is cheap, and they were basically doing the job and presenting in Silicon Valley that it's AI.
They were actually here, but I mean they were literally graduates that we got out of university that did it, and they did a terrific job. And
but it's a necessary step.
Exactly. I mean, obviously that's not scalable, but that wasn't originally how it kind of worked. But we very quickly, obviously, built the code and built the platform to kind of automate that.
Can you recall any biggest fails at that time when you were doing your first steps into?
I mean, you always had the occasional kind of fat finger. Someone sent too much money to somewhere, and we had to go ask very nicely for them to send it back.
Yes.
That did happen a few times. Fortunately, people always did. So panic over. But I mean, that was always a bit of a. I mean, that's the thing with any manual process, right? It is prone to error because people are not flawless. People do errore humanum est. I mean, people do make mistakes. They don't mean to, but they just do.
Right.
So that's the biggest danger with any manual process is that human error is always going to be a risk.
And any situations with, for example, blockchain, usually you let's say you want to send USDT, you can send it on Tron or other network.
Yeah.
Happened also at your company?
We had a couple of incidences. I mean, nothing material.
Yeah.
Nothing kind of like business ending. But yeah, I mean, there were a couple of instances where, we maybe crypto was sent to the wrong address. It was sent twice.
Yeah.
And again, I mean, it was never. We never lost money. It was always returned. But I mean, I guess that's nice. We had honest customers, honest counterparties that would always reverse it.
And your development team, it was always in-house, or you hired someone out?
It's always been in-house. Yeah, we've always had our own team. I mean, we will buy products. We will partner with people, so external, and then they can sort of they can kind of tailor make stuff to our. I mean, we're doing it at the moment with a couple of tools on the compliance side where we buy a product and we work with the developers in the company to kind of tailor it to our needs. But I think that's for us has been a good way to go. I mean, we don't really have anything I mean, the basic platform is our platform that we've built from scratch. But stuff like order routing, IBAN generation, onboarding tools, kind of monitoring tools. There's no point in building it yourself. I mean, you really are better off just kind of buying it, just kind of buying it, and you know, having it tailored to your needs, I think.
So where is this line between outsourcing and building in-house? It like depends what kind of solutions are on the market, if they are cheap enough to just have it, or like
Yeah,
they
I mean,
develop
I think it
most.
really goes what's the process that in question. I mean, something like transaction monitoring. I mean, you know, like there are tools out there which, you know, it wouldn't be economic to build your own TM tool. It wouldn't be. I mean, I remember we you know, on the reconciliation side, because we're a payment firm, and we have obligations around kind of reconciliations and safeguarding and everything else. And I remember our original kind of rec tool was a thing that we built ourselves, which was basically a spreadsheet. It was a Google sheet that had been heavily engineered, and I mean, it was just about fit for purpose. But I mean, yeah, to have built something that was scalable and fit for purpose for a business as it was growing very quickly, it wasn't economic for us to do it. So you know, we've now, you know, we now partner with, you know, kind of AutoRec, which is one of the leading, you know, kind of rec tool providers out there. And I mean, yes, we've tailored it heavily to our needs, but I mean, you know, the kind of ROI on building an AutoRec versus buying it and tailoring it to our needs, it's a no-brainer to do that.
Yeah.
So I mean, it really depends on what's the process. If it literally is bespoke to us, you're probably better off building it yourself. But if it's something which is, you know, other people do, and there's products out there which, you know, do it better than you can ever build, there's just no point in building it yourself.
Are you involved into like finding the best solution regarding those questions? Like
Me personally,
yeah,
I was in the early days. I'm not now. I mean, I'm not really competent or qualified to,
yeah.
you know,
So the team is
to assess it. I mean, I'm not, you know, if someone asks me, is this better than that? I don't know. You know, you know, I've got my CTO, I've got my CPO that are far better placed. I've got subject matter experts in the business that are far better placed to assess tools than I am. So no, is the short answer.
What are those 3-5 metrics which you monitor today from each day as a CEO? Yeah.
I'm looking at volumes on the platform, the number of transactions. I'm looking at, I mean, you know, what customer funds we're holding, because I mean, that's, you know, that's important to me to understand that. And then monthly, it's obviously it's revenue, it's new business, it's, you know, what business have we lost for whatever reason, you know, margins, you know, costs, you know, what new hires do we need? What new hires can we afford? You know, again, I'm fortunate enough to have a very kind of strong and competent finance team that have built the appropriate tools to allow us to make that assessment. And then on the compliance side, it's, yeah, things like, you know, have we had any kind of recall requests? Have we had any kind of fraud claims? Are there any customers that we should be concerned about from a compliance point of view? Yeah. Stuff like that.
So usually, how your day look? Like it usually, you start the day, you have calls.
Yeah, I'll have it, you know, internal calls with key people.
So you start with the team calls?
Yeah, I mean, we have a call 3 times a week, like an all hands call. We kind of start the day with that still there. You know, I have direct reports that I'm very kind of close to. You know, key partners, key customers, you know, banking partners. You know, key projects that we're working on, new licenses. You know, again, you know, key commercial projects which are, you know, very material for us. I'll be obviously be kind of all over those. I mean, there's a lot of, you know, management is like, I don't know. I mean, I like to trust people to get on with it to a certain degree. I mean, we are a semi-remote business, so probably half the people that we employ work in and around London, so I see them quite often.
Yeah.
But a lot of people are, you know, we've got people in France. We have a French business, Switzerland. We have an office in Johannesburg, which is our internal kind of outsourced team that work with us. We've just opened an office in Dubai. So I mean, these are people that I'm not going to physically see them very often. So it's, you know, I'm in close contact with the key people there to make sure that everything's going as it should be. And then, shareholder, stakeholder, management as well.
Yeah. How intense are you involved into your customers' communication? How often you talk to customers?
I used to be very involved in it because we had a much smaller number of customers. I think now we've got 500 customers
Yeah.
globally. So I mean, I tend to be involved when there's a problem,
Right.
which is not always. It's like a bit annoying because I never see the bad side of things. But I mean, yeah, generally, I mean, it's always nice when you see a really customer that's really happy about something because again, I tend to only see the problems. But we have key customers that I know reasonably well. But I mean, yeah, 500 customers. I mean, I can't monitor all of them.
So mostly it's structured according to, let's say, volumes, or
Yeah,
like if
well,
the
volumes,
bigger the
revenue.
customer is, the
Yeah, exactly.
more often you have to meet usually because
Exactly. Yeah, exactly. I mean, we do have key customers, some key ones,
right.
which I say I'm pretty close to, but that's a small number, versus
And you don't interact every day or every week, right? Usually it's
no.
yeah. What was like you were talking about the team? You have a strong team.
Yeah.
What was the strongest hire in your team, and what exactly that person did?
Wow. That's a good question. Look, I mean, I hate naming names because if I name a name, I'll sort of damn them by omission. I mean, we do have a really strong. I think we've got a really. I mean, the last couple of years we've had a bit of churn in the business in terms of some people have kind of left. I think we've upgraded across the board in terms of the people we now have. So got an amazing CFO. A great new hire on the compliance side. James has recently joined. Product legal. I think the one hire in the last 2 years that I'm really happy with is Tim, who's now our deputy CEO, who I think has really driven some very strong improvements in the business internally. Because I mean, I'll be transparent. I mean, in myself, I mean, I'm a lawyer of a background. I'm a transactional kind of guy. So I think I'm good at some things. Other things, either because I haven't got much experience of it, or it's not really my thing, I'm not so good at. And I think and also I've never done this before. So I think it's always nice to have somebody in the business in certain things that has done it before.
Yeah.
So I think I mean, Tim's background is I mean, he's got a good fintech background. He's done a number of startups and scale ups on the fintech side. He's got that experience which I didn't really have. So I think the changes that he's made internally have been universally for the better. So yeah, I mean, I am very pleased to have hired him, and I'm very pleased that he's at the business. That would be, but again, I don't want to damn by admission because there are whether it's again finance, marketing, product, banking, operations, legal, a really strong team across the board. So I really don't want to damn by mission because
definitely.
we've got a really strong team now.
And if we go back into 2017 or 18 at the beginning, so probably like you were starting with your co-founder, maybe you had like a core team, right? Because you have to have compliance or something.
We did, yeah. I mean, they're pretty much all gone now. I mean, the only people that are still with business now who were there from in the early days are the people that run our South African business. So Greg and Jarrett were there from the start.
Yeah.
Doing our tech, doing some of our ops, and I mean they're still there, and they're still incredibly strong contributors, and add huge amounts of value to the organization. So I mean, they're the two guys. I think other than me, I think they're the sort of oldest in terms of duration of service, the oldest employees. But I mean, I think with any fintech, right? I mean, there's always going to be churn, and I mean, I guess I mean most people in the business have been with us not that long, because that's the nature of, you will get churn, people will come, people kind of leave, and I guess as you grow, you get more people that join more kind of recently. That's just the nature of the beast.
What roles are the hardest to hire?
Compliance is hard.
Compliance,
because there's
everywhere.
Well, I mean, it's a tight market, particularly in kind of crypto and digital assets. It's a tight market. There are people that have got meaningful experience, and who are very good is a small number. Yeah, so I think that's a hard role.
Yeah.
They're hard roles to hire for. I think product is hard too. It's product. You're finding really good product people that have got that mixture of sort of expertise, stakeholder management, and just drive. I think is difficult to hire for. Sales too. I mean, you never really know with someone if they're going to be any good or not until they actually start.
Yeah, until you try.
Yeah, people kind of promise the earth, interview really well,
Yeah.
and then actually aren't what you expect. And I mean, I think I challenge anybody. Anyone's like, oh yeah, I generally hire really well. A lot of it's luck, honestly. You're never going to know until someone literally opens their laptop and starts the first day. You are never going to know if they're really any good or not.
Yeah, exactly. Sometimes you can talk to the old employer and
Yeah,
ask
you can.
questions.
Yeah, you can get you can get a good sense of someone from that for sure.
Yeah, but still, like you have to try. You have to give. You have to give a try.
Yeah, but also older employers now. I mean, they're quite cautious about what they say because they don't want to get sued. So I mean, people are generally they're quite. It's very, very difficult. But I think generally we've hired well. I mean, it's never perfect. Generally, I think we've hired pretty well.
How do you do this? How do you find top talents? What helps you to do this?
I mean, you use agencies partly. I mean, I mean, for the key roles, I think you need external help. I mean, we've just hired somebody that's sort of taking a more direct approach, but that's quite early. But I think for the key top hires, you've really got to go external and kind of get somebody to help you find the right people.
If you talk about your personal brand, it helps you to hire, or maybe someone texts you on LinkedIn sometimes asking for a job, or they saw you on LinkedIn, then applied on the website. Have you tracked that?
I mean, our website's been okay. We've had some good people, that have applied directly. I think people that approach directly on LinkedIn to me, I'm just trying to remember. I mean, I don't think we've had anyone. Well, people do it all the time. I don't think we've had anybody that's been like a sort of an amazing hire that's been through LinkedIn directly. We have some good hires that have been, that have reached out through the website. Yeah, I mean, we've got one of our members of our legal team did that, and I mean, she's been great. So, but generally, the best talent, you really hire through agents.
Yeah, because they usually know the talents on the market, and they just track if they are free.
Yeah, exactly. I mean, they will know the market better than you ever can. Generally, I mean, particularly where there's a expertise in a certain segment or a certain, a certain sort of discipline. Yeah, they will know the market better than you ever can.
Yeah. What management mistakes cost you the most?
Ooh.
The most money, the most time?
What a question. So I think back in 2021, we did try and buy a bank. Now I want to be careful what I say here, but that was the right strategy. Probably not the right target.
Okay.
And we spent a lot of time, and we hired people and focused their attention on that project, which ended up not happening. And it doesn't matter why. Again, right idea, wrong target. Let's leave it at that. That really the management time that took up during what was also a really shitty market. Like 2023 was a shit market. And that was during FTX and all that other stuff. I think we lost really 18 months to 2 years that we could have spent doing other things. And this is with hindsight, right? This is me now in 2025 rather than at the time. But at the time, it seemed very important that we sort of focus on it. But with hindsight, it was the right strategy, wrong target. Let's put it like that. And we spent a lot of time and a lot of money and a lot of opportunity cost on a project that actually we'd have been better off not doing, and we could have done other things that we're doing now that we kind of could have done 2 years ago. But that's with hindsight. I'm not going to criticize people in the business at the time because they were doing what they were told to do. and we were focused on that project because we committed to it. But with hindsight, I think that was and also with hindsight, we probably didn't have the organizational depth to really, run the project either. With hindsight,
And you have already 8 years of experience, and as you said, among your customers usually you have OTC desks, other WASPs, crypto companies. What do you, in your opinion, what's the biggest mistake usually founders of crypto companies do in the markets if they have smaller company?
I mean, I don't know about now, but I've been certainly my observation of crypto businesses in the early days was that they massively because don't forget, a lot of crypto people at the time were deep tech people, right? They were programmers with really zero kind of financial services understanding or experience, and so they had no understanding of what good looked like in that sense. So like, whether it's or kind of InfoSec or anything else, all that kind of stuff that's really boring, but is actually for the longevity of what is a financial services business, right? I mean, digital assets ultimately is that, if nothing else. I mean, you can criticize it, but that is what you are selling somebody a product or a thing that is in some way financially related. And I think a lot of people in the early days, because they weren't from that background, had no understanding of it and then ascribed zero value to it for that reason. So they built amazing products and UIs and whatever, but actually they were flimsy from the point of view of longevity and compliance. You think of the number of hacks, right? People, it still happens now, right? Because people didn't think about it. So I think a mistake. And I mean, I'm not going to sit here and say every crypto business needs to start from the ground up and invest in money in compliance. Be sensible about it. But people had basically just didn't do any and didn't understand it. So I think if you're a business, it really depends what you want, right? If you don't care, do whatever you want. But if you want to build a business that's got longevity, that ultimately might have some value, whether you can sell it, IPO it, whatever. You need to focus on product is important, tech is important, the UI is important, but it's the others also really important, because particularly now in this market, people will look at it in a way that they didn't look at that stuff before. So that will be my advice. Basically get good advice on that stuff early, so that as you grow, you're set up for the future. That'll be my advice.
So you better not hunt those fast money and try to balance, right? So that you can stay longer.
It depends what you want. But I mean, I think anyone now today, regulations only going to get probably harder and more intense.
It is.
And as other market, and also you've got lots of different regimes now. UK, Europe, US, UAE, Singapore, wherever, right? Everyone's got a different regime. So I mean, you've unfortunately, it's just a thing. You can not like it, and I mean, the hardcore crypto people, hate regulation, and they hate governments, and they hate the conventional world, and they want to put everything on chain and whatever. But I think you have to be realistic. I mean, if you aspire to run a business for the long term, you can't ignore that stuff. That would be what I'd say.
How do you personally set the goals in your company?
Good question. So I mean, we have obviously kind of overarching what are we trying to achieve, whether it's in a wider strategy, a project. I mean, we have we have a vision, we have a mission, we have OKRs that we kind of set usually kind of biannually, so every kind of 6 months. And then we hold ourselves to those, and then each project is obviously run with that in mind. So this is why we're doing this project. what does good look like, by when, and if it's, red, amber, green, basically.
And if there is some opportunity, for example, you see that in the next from 2-3 years, some of the country in Asia might boom, and it will you can earn a lot of money. Like, how do you usually make this decision if you want to go on that market?
So when we're assessing a market, it's really, well, how big's the market? How big is the opportunity? And is what we do going to address that opportunity? So I mean, supply demand mismatch, right? I mean, if there's a massive demand for what we do and there's no supply, great market, right? So I mean, I think we're looking at the Middle East at the moment, for example, which is very, very fast growing ecosystem in digital assets and digital asset payments, but actually relatively underserved. So I mean, that's, for us, it's a really interesting space. Africa, Asia, Latin America, super interesting spaces. North America, there's a lot of noise, obviously, with the Genius Act and the sort of regulatory tailwinds we now have and government support. A lot of money is going into that market.
That's a good example, actually. About
very, it's super competitive. I mean, there are people that are literally spending tens of millions of dollars trying to get market share. And I'm not saying that's the wrong thing to do, but I mean, if you don't do it, if you don't win, it's a lot of money. It's a lot of money down that's at risk. So
after the Genius Act, for example, you see that the market is opening there. You see the opportunities. Who at the end is responsible if you're gonna go on the market or not? Let's say your team says, the market, like we might go there. We need that kind of investments. This is the competition, but we're not sure. So,
well, I mean, so fundamentally, that's an exco decision. So there's a small number of people in the business. Again, you say there'll be a proposal, there'll be some analysis, which maybe product, finance, or commercial will do. I'll say this is what we want to do. We think this is a good idea or not. What's the return on investment?
Right.
And then you start, because I mean, you can't do everything. That's the point. I mean, we do not have as a business infinite resources. Nobody does. Right? Nobody has that in any business. No one's got infinite resources. Even Google, right, will obviously their bar is very high because they've got so many things that they want to do. But they will assess an opportunity based on competing projects, competing needs. What internally resources you can apply to any given project. So we do set the bar high in terms of if there's a key project, a key geography, a key license. What does it do for us, right? What's the revenue opportunity? Will it fundamentally increase shareholder value? Because of that, I mean, you can't ignore that, right? I mean, if there's a license that's really hard to get, that is valuable to us, it'll probably be valuable to somebody else. So I think you have to look at it like that.
Yeah. And usually you rely on data, or sometimes you can listen to your intuition as well.
It's a bit of both. It's a bit of both. I mean, it's quantitative for sure, but I mean, you can't ignore the qualitative side of it, right? I mean, I'm not saying go with your gut, but I mean, because your gut's not always right. But I think it's a mixture of both.
So you still don't have to forget about intuition and listen to that.
But it needs to be guided on something. I mean, you can't just kind of guess.
Just get
otherwise you might
wake up in the morning.
Yeah, you might as well go to the casino and put it all on red. I mean, it's got to be based on some kind of data.
Yeah.
But yeah, I mean, I think having some sense of this is the right thing to do. I think is you ignore or it's not the right thing to, like, it's like with the lending thing, right?
Yeah.
It looked like a big opportunity.
Right.
Just didn't feel right. So therefore you don't do it.
After 8 years in developing BCB, if we talk about intuition, do you listen to it more with time, or now you try already to rely more on data, or like how how you see it, like the intuition in your life? Because at the beginning, of course, it's when you even started the business, right? It was not about the data, because there was no basically market. It was risky. No one understood it. So it was kind of intuition, I would say. Now in 2025, the role of intuition in your life is same, or the team, the data is more important?
I mean, you should never ignore like the factor of luck in anyone's life. I mean, I've been very lucky in my life to have had some great experiences and, you know, some great opportunities. I mean, yeah, a lot of it is luck, right? It's kind of serendipity, you know, who you meet, you know, how things kind of play out. I was lucky to meet my wife, right? Well, what I did, I was lucky to, I don't know my co-founder from here and meet him and do this. So I mean, there's a degree of luck in anything you do. To some extent, you control your own luck by, you know, your data. So you sort of, yeah, is this like I say, if everything is saying this is a terrible idea and then you do it, you're kind of a bit of a fool. Yeah, there might be a 1% shot that you turn out to be right and the data's wrong, but generally, if something is telling you it's a bad idea, you should probably kind of listen to that. But I think I'm 51 now, so I mean I've had a fair degree of kind of life experience, and I think just to a certain extent, I will trust my instincts.
Yeah.
Because one's instincts are in part founded through experience.
Right. Usually behind those instincts are some.
Yeah. I mean, it's nature and nurture, but
Right.
yeah, I mean, if I'm 51 years, I've got enough of a data set of kind of what people tend to do and behavior and like life. I've got enough. It's not perfect by any means. I'm not saying that I'm a sort of all-seeing, you know, kind of, you know, savant, but I mean, I've got enough experience in my life that if my gut's telling me I should do something or I shouldn't do it, I'll generally pay some heed to that. But also listen to other people, right? What other people think? You know, if everyone's saying it's a bad idea, you might want to listen to them, and kind of vice versa. So it's a bit of both. I mean, I will listen to my instinct, but I'll also be guided by what data's telling me and what other people are telling me.
Yeah. Yeah. So it just to summarize it, it's still important to listen to yourself, but just get more.
Otherwise, what's the
information
point? If you don't listen to yourself, I mean, if you know, like I say, I've made some good and bad decisions in my life, but I've got at least a data set in my head of my own experiences to kind of guide me in part. And if someone's telling me someone's a wrong one, I'll tend to listen to that.
Yeah. What are the next 2-3 bets in the market, in the crypto market, for the next 3-5 years, you think?
I think stable ecosystem growth and evolution is a thing, and it's going to happen, and I think it will transform the global economy and kind of how it works. I mean, again, it's still really nascent, right? I mean, stablecoins as a use case have historically been exchange liquidity and, you know, illicit activity. Let's be honest, that was a thing historically, right? That's how they've evolved, and they are still used for that. But I think the more legitimate use cases, as regulation comes in, regulated players come in, you are definitely now seeing, albeit from a nascent point, that the use of that technology, stablecoin payments, remittance, as a thing, particularly in emerging markets, I would say, less so maybe here, particularly in emerging markets, whether it's B2B transactions or even like B2C, C2C, right? It's a thing, and it will grow a lot over the next 5 years. And I think it's now too far gone actually to not be, become extremely important over the next 3 years. I mean, that will be one. I mean, I'm not unique in saying that, and I'm not lots of people are saying that, but I think there's enough data now that you can see that that's going to become a really big thing.
Some researchers say that in the next 10 years, probably 9 out of 10 payments would be done with stable coins on blockchain.
I mean, I think
you agree with that?
I think globally, I think it will depend on jurisdictions. I think where banking, or particularly fast kind of instant payment banking, is well embedded, there's less of a like SEPA instant, faster payments. You kind of don't really need it.
Yeah.
But I think cross-border like emerging market flow, or places where or kind of unbanked markets, I think that's very plausible. Yeah. I mean, people do it now on their phones, right? Places like Kenya, people use like mobile phone minutes to transact. And I mean, that's, why wouldn't stablecoins become the sort of, means of doing that through just a kind of QR code and some kind of, kind of Bluetooth, NFC kind of thing. I mean, it's absolutely plausible that could happen. Yeah.
Yeah. What else? Stablecoins, tokenization, maybe.
Tokenization is an interesting one. I definitely think kind of money market kind of like yielding assets. You can definitely see that as being a tokenized use case. Equities, we'll see. I think fractionalized equities is already kind of a thing now. We'll see. I'm not. I don't know. I mean, I'm not sure yet. I mean, I could certainly see a blockchain-based equity market as being really interesting, purely because even now, I mean, if you think about the kind of LSE, it's still T+2, right, to settle on the London Stock Exchange, which is really mad in this day and age. I mean, if I sell a share in my SIP, in my portfolio, it doesn't clear for 2 days. And that, I think, in this era really is unacceptable. So I could definitely see a blockchain-based, ownership, maybe it's, blockchain-based, share registers, bond registers. I could see that as being definitely a technology which will improve the experience of a transaction, for sure.
And what kind of business models you think in crypto business will die the first?
Will die? I mean, I don't know. I mean, there's still a lot of tokens out there.
Yeah.
Right. I mean, even this is heresy, but even Bitcoin. I mean, what is it really for? I mean, it's a store of value, yes, but I mean, there's not other than speculation, the store of value. It's not used for very much. I mean, there's like Lightning and some marginal Bitcoin-based use cases, but they're very small. And I mean, what is Bitcoin for? I know there's a lot of Bitcoiners out there who like curse me with that, who love Bitcoin, but it's a question we should ask, right? I mean, what is it for? I mean, stable coins, there's a real world use case for that technology that's very clear and easy to understand. Bitcoin less so. I mean, like ETH has got a use case because it's gas, right, on the Ethereum network.
Yeah.
Always like Solana's the same. There's a use case for that, but for Bitcoin, I don't know.
Reserve?
Maybe, but I mean, reserve for what? It may be heresy to say that.
People's interactions between each other.
Yeah, maybe. I mean, it's we still live in a world where inflation's all over the place, right? I mean, people, governments will continue to debase their currencies. It will happen. It's happened here. I mean, I read something the other day that like the pound, it's like it's 170% of its value has been lost. It's like some crazy stat, right, from 20 years ago. So I mean, people, governments will debase their currencies. It will kind of happen.
Yeah.
So there will be a use for gold, digital gold, whatever. And I mean, maybe that's the answer. Maybe Bitcoin is the ultimate, a debasement-free asset.
Yeah.
But I mean, I don't know. I mean, I think about Bitcoin less, to be honest with you, because it's less important for our business these days. But I think it is still it's a question which should be asked, and I don't always hear a compelling answer to it. So that would be something that I'm just putting it out there because I don't know. But it still intrigues me as to how that will evolve. I don't have an answer, but I'm, you know,
I
not entirely convinced.
Because I also see the trend that before, like a few years ago, usually some people who had access to crypto purchases in emerging markets, they were buying Bitcoin or
Yeah.
Ethereum, for example, to store
Yeah.
the value. But now what they are doing, they are buying more stable coins because it's, let's say you are getting the dollar in the place where you cannot get the dollar.
Exactly.
And it's not the price. You don't have today $100,000, right? And tomorrow 80.
About volatility, right?
Yeah.
I mean, people still love dollars.
Yes.
It's still the reserve. It's the global reserve currency, pretty much. But I mean, it's probably in stablecoin terms, 99% of stablecoin by volume and AUM are dollar based. Is that desirable? I'm not sure it is necessarily, but it is what it is right now.
Right.
I mean, my view would be just on that point that I think tokenization for non-dollar denominated assets will need non-dollar denominated stablecoins because otherwise you're taking FX risk. I mean, if you're buying an asset that's like a non-dollar denominated, bond, and you want to buy and sell, you don't want to necessarily, like a euro bond. Not everyone's going to want to sell and exit into dollars. They're going to want to exit into euros, or to pounds, let's say, or to yen, or to whatever. So I think that in terms of like you are going to need non-dollar stablecoins for that use case.
In this, like in the next 3-5 years, how do you think the role of banks will change? Because today it's mostly about rails.
Yeah.
Do you think you'll have more mutual activities like yielding together, earning together?
I mean, that's a really good question. And I think the answer really, it's not necessarily banks, it's central banks and regulators, how they feel about it.
Yeah.
I mean, there's plenty of banks that want to play in this space, but they're limited by what they can do by the regulators that they have today, right? I mean, there's a bank here that's a well-known sort of fintech enabler that kind of wanted to issue a stable coin and was told that they couldn't do it. So I mean, that's why I'm pointing around. You're to a certain degree you're limited by your regulatory perimeter and what governments want you to do. I mean, certainly in the US right now, there's it's a bit of a free for all. There's lots of banks that are popping up that want to become digital asset native banks because the regulators are happy for them to do it. Will that always be the case come the next election in the US if Democrats get in? I don't know. But there's no shortage of willingness within the banking community. It's really how fast they can move and what the regulators are happy with them to do. Because if you've got, for example, penal reserve requirements for holding stable coins, they're probably not going to do it. I still think it isn't. I mean, like kind of Basel III, I think there's still some crazy reserve requirements for like holding crypto assets. Therefore, it's not happening.
Right.
So I mean, again, it's a hard one to answer without having a better view on what governments. And I mean, I still think governments are pretty suspicious about just crypto because they worry that they'll lose control of the currency. That's what they're worried about.
But usually compliance maybe very slowly, but usually it tries to follow the business and the what's happening in real life. So you think what's happening between the banks and crypto business, like traditional banks and crypto businesses, so that what they are willing to have?
I mean, they're definitely opening up. I mean, I don't believe that banks will just suddenly say, yeah, crypto companies will give you normal banking and you do whatever you want. Because again, the reality is that banks like customers that are cheap to service, right? That's why they like, I don't know, people, because they're generally cheap to service, right? Unless they're something weird. As soon as a segment becomes expensive to service, whether it's compliance heavy or whatever, it's less attractive.
Yeah.
And crypto, I think, will always be expensive to service from a compliance point of view, because just the nature of the thing, because it's not common or garden, and therefore a lot of banks won't want to do it. And I don't think that will necessarily change. Like really big companies, like stablecoin issuers, banks love that, because it's just like basically you want to hold a reserve, of course you can have an account,
Right.
and there's hundreds of millions or billions of dollars or whatever sitting in an account of which they can just kind of monetize. That's great business. But like Rails, or other things that are more expensive to service, less attractive. That's just bank economics. I mean, look, I could be wrong, but I think that's why people like us. I think where businesses like BCB are in a good place, because banks will deal with us because we take the pain from the underlying kind of book. They'll take our business, but as a sort of go direct, I think other than the like kind of big players, I think that's when it becomes harder.
What advices would you give to smaller crypto companies?
Get the right advice early. I said to you. I mean, set yourself up for success. Don't be afraid. I mean, I know getting advisors, lawyers, whatever is not free. But I mean, again, it's what you want to achieve. If you want longevity, if you want to build a business that's fit for purpose for the long term, get the basics right early. Is what I would say. I mean, I would say that, wouldn't I? Because I'm a lawyer, and lawyers love giving advice to people. But I think a lot of the mistakes that are made are people that are not setting themselves up for success early. Because as soon as you do that, it makes growth much easier to scale, much easier to achieve, because you've done the basics right at the start.
Did you have this moment in a business in BCB that you felt that you want to quit, but you continue?
That's a good question. No, I haven't, because it's still really. I mean, I'm not saying I've not had stressful moments. God help me, I have many. But I think partly because it's still really interesting, and I like interesting things. I like interesting people, interesting problems that require thought to solve. I think if it gets boring, then that's a different question. But it's still interesting. And look, I've got shareholders, I've got employees, I've got customers that I do feel a responsibility to. Personally, I do. I mean, if someone gives me their money, whether it's as an investor or it's a customer, or someone wants to come and work for the business that I'm running, I do feel a responsibility to them. And so it would be wrong, I think, to just like down tools and walk away. So no, I've never felt, like I'm out of here. Never felt that.
Yeah. What was the best advice you've ever received?
Take every meeting.
Take every meeting.
Because you never know what'll come. Even if it's a waste of time and you kill it off 5 minutes, always take a meeting.
Yeah. You never know where the biggest opportunity.
I always take a meeting. I always if someone says, "I'll give them a coffee," of course, because you never know.
Right.
You never know what will. I mean, and there's example. I mean, I remember there was a guy that I know quite well, who I literally he reached out to me on LinkedIn saying, "Can you help me with this?" And I went, "Okay." So I gave him a call, gave him some help, solved his problem for him, and he's now a customer of ours. And he thinks I'm great. So I mean, that's as I say, you just never know. You never know what will come. Even if 99 meetings are a waste of time, there's always one. There might be a great opportunity. Might be a business opportunity that can transform your life. You never know.
Totally agree. Same philosophy.
Yeah.
Like you nurture basically from the very beginning. Sometimes the relationships. Yeah. One thing you would have done earlier.
What, in this business?
In this business, yeah, in BCB.
One thing I would have done earlier. So right, okay. Well, I'll tell you. I mean, you know, I haven't followed my own advice here, but you know, get advice. Honestly, I mean, I thought, you know, I did a lot of stuff in the business, kind of myself at the early point, and actually, I would have saved a lot of pain if I'd maybe got some advice on it earlier. Thinking that I was you know, that I knew everything. I won't tell you on what, but I mean, yeah, certainly on the kind of compliance side, you know, we should have got someone in earlier that maybe was the right person at the time the business was at.
Yeah.
That's something that I would probably have done.
Have you ever hired any mentors or coaches?
Yeah.
Yeah.
I have mentors and coaches. Yeah.
From the very beginning
Mentors, coaches, therapists.
Yeah.
100%. Don't be ashamed to seek help. That's my point. Don't be ashamed to seek help. You know.
Yeah, that's a good advice.
No man or woman is an island.
Right.
You know, I think the worst thing you can do is if you've got like angst or, you know, challenges that you're trying to deal with. I think particularly kind of British men historically are like stiff upper lip. You've got to sort of suck it up and sort of put up a kind of strong facade, right? So sometimes you do, but I think, you know, talking to people about things in a kind of safe space is an underrated thing to do.
Yeah. Good advice.
It helps you, you know, a problem shared is a problem halved, right? And that is true.
Yeah. Good. Then I have last question.
Go on.
How did you earn your first $1,000, $10,000, and $100,000
In my life?
in your life?
My first $100.
$1,000.
It would have been, I think, probably my first summer job when I was at university.
Yeah.
Long time ago now, and it sounds ridiculous.
It's huge money at the time.
Well, this was like pre-internet, right? So like a long time ago. I had a job, and it was like manual data entry into a computer, and I literally had to take someone like thousands of handwritten like data points and manually put them into a computer.
Yeah. Well,
This is for the internet. I mean, I was like 19, so that was probably, and I probably earned at the time, it would have been maybe 500 quid, which would have been $1,000 in those days.
yeah.
That would probably have been my first 1,000. My first 10,000. It probably would have been when I started kind of work after law school. So I was a trainee. I think my salary was like, I don't know, 18 grand or something.
Per year, right?
A year. Yeah. That would have been my first 10,000. First 100,000. What, salary or like a lump sum?
The first time ever you had those money in your life, basically.
I had 100 grand in my bank account.
Yeah.
First time I had 100 grand in my bank account was, I think, probably when I sold a small number of shares in BCB.
Yeah.
I think I had 100 grand. I had a few hundred grand. That was probably it was a really small sale, right? Just a tiny little sale.
So you cashed out.
It was a tiny amount. It wasn't like nothing. It was a couple. I mean, that would have been first time I had that in my bank account. Yes, that would have been.
Why did you do that? Like you wanted to buy something?
No, I mean the opportunity was there. I mean it was, you know, this was like in 2020, 2021, and someone wanted to buy a stake, and so he said, "I'll take some. You know, can I buy a few?" So yeah. I sold him. Like, I believe you me, I'm still heavily invested in BCB, and I've got, you know, I've in no way cashed out. Let me tell you that. But yeah, it was a small amount.
Yeah.
So that was the first time I had that much, like actually in my account. I mean, I've obviously earned more than that in my life, but first time I had a sort of a decent six-figure sum in my bank account was that. That's my problem in my life. You know, every you know, if you have a wife, mortgage, and kids, money goes out the door a lot, you know. Not my wife. Yep.
Yeah, that's the biggest motivation as well.
Kids and a mortgage. Money goes out.
Right. Good. Okay. Thank you.
Pleasure.
Thank you for those insights.
Pleasure.
And yeah, that's it then.
Great stuff.
We
That
have
was good
recorded.
fun.
Yeah, thank you for the
Nice therapy session.
Thank you for sharing. Yeah, a lot
Pleasure.
of good insights, especially with the with don't be afraid to ask for the help.
Yeah.
Because I had the same, like when you start the business, you think you're the strongest, you're the fastest.
Yeah.
And usually like you try to work hard and then you forget about asking something because you feel that you are not
Yeah.
that strong anymore.
Yeah.
And then at some point you understand that you don't have enough already experience. There are so many other people who are also smart. Some people have better background than you. Like I don't know, like someone is the lawyer and they can do better compliance than you do. And it happened to me. At some point, I realized that I have to ask for help, and I got some mentors. I hired a coach, and a lot of different things changed already. Like
Yeah.
life became a little bit easier. You are not nervous about everything. The business becomes more like a game.
Yeah.
So it changed a lot in my life. Yeah.